Hi, welcome to our channel, and I'm Joanne. Price is an exchange rate between an asset and money. So when we make a deal, we exchange money with an asset. When we buy an asset, we are selling money, and when we are selling an asset, then we are buying money from the other end. This way, we get to view money as another asset class also. Value of fiat money, such as Korean won or US dollars, will be diluted in the long run because the central banks will continue to print more money. That's why I do not view fiat money as an asset that is worthy of accumulation in the long term. We need to exchange our fiat money with value-creating asset at, of course, proper exchange rate. But we come to the question that how do we recognize a value-creating asset? In our last video, we talked about asset with cash flow history is a little bit easier to value. In today's video, I'll show you how to draw a cash flow diagram to figure out whether you should go for this investment or not. Should I purchase this condo? Should I buy this dividend stock? Or should I buy this crypto asset? We can answer all these kind of questions. Whenever I run into investment opportunities, I always draw this cash flow diagram to figure out whether I should do this or not. Cash flow diagram is a series of all cash flows during the investment horizon. When we purchase an asset, cash flow goes out of a pocket, and during the holding period, cash inflows and cash outflows will come and go. And lastly, cash inflow will happen when we dispose the asset. We can use Excel spreadsheet to record all these cash flows to drive IRR, which is internal rate of return, and it is the expected yield from the investment. Let's take Johnson & Johnson for example. J&J is one of the dividend aristocrats that have paid dividends for more than decades. If we have invested J&J stock for the past 5 years, what would be our investment return? The stock price of J&J was $145 US at January 2018, and the recent price is $175 US. In 2018, when we purchased the stock, we have sold the money in return and purchased the J&J stock. During the holding period, we received a dividend income in every 3 months. After 5 years later, we sold the stock for $175 fiat money US dollars. All we need to do is write down these in the Excel spreadsheet and figure out XIR function to drive the annual investment return for the past 5 years. XIR function will calculate the annual investment yield, which also consider time value of the cash flows. Annual investment return for this case is 6.32%. Was this a good investment? It depends on your target investment yield. If your target investment yield was lower than 6.32%, then you've done a good job. But if your target was higher than this, then you need to do better next time. To make investment decision, we need to figure out the future cash flows of the investment. In case of dividend stocks, number 1, we need to get historical dividend data of the stock and make the trend line to forecast the future dividends. Number 2, forecast the terminal value to get the final cash flow at the end of the holding period. Number 3, use XIR function to get IRR of the investment and compare it with your target rate of return. If the expected IRR is higher than your target, then it's a go for it investment opportunity. We can use this cash flow diagram to evaluate any investment opportunities. I use this cash flow diagram to evaluate all the investment opportunities in the real estate properties, dividend stocks, and even crypto assets. I try to put in all the forecasted cash flow during the investment horizon to derive the IRR and compare with my own target rate of return. This simple practice will help you to distinguish the right investment opportunities and with those that you should not go for. Hope this helps. Thank you for watching.